Unveiling the Stock Titans, Top 20 Best Monthly Paying Dividend Stocks. Welcome back to High Access, your go-to channel for all things finance. Today, we're diving into a topic that every investor has on their radar, the top 20 best monthly paying dividend stocks to supercharge your portfolio. If you're looking to secure a steady stream of income while potentially growing your wealth, you're in the right place. Stay tuned as we uncover the stars of dividend stocks that can help you achieve your financial goals. Let's get started. Number 20, DX. Kicking off our list at number 20 is Dynex Capital. This intriguing player is not your average stock but a real estate investment trust with a focus on mortgage loans and securities. What sets Dynex Capital apart is its robust investment strategy with over 90% of its portfolio allocated to agency residential mortgage-backed securities. This prudent approach has allowed Dynex Capital to weather market volatility effectively, making it a potential contender for income-seeking investors. But here's the real kicker. Dynex Capital offers a dividend yield of nearly 10%. Yes, you heard that right. A double-digit yield from a REIT is nothing to scoff at, especially for those hungry for consistent monthly payouts. So, if you're keen on diving into the world of mortgage investments while enjoying a handsome dividend, Dynex Capital might just be the stock for you. Number 19, EFC. Moving on to number 19 on our list, we have Ellington Financial. This financial powerhouse specializes in acquiring and skillfully managing an array of financial assets with a particular focus on mortgage-backed securities. While its book value per share has experienced fluctuations, what truly makes Ellington Financial stand out is its unwavering commitment to delivering a consistent monthly dividend. Despite the occasional ups and downs in its book value, Ellington Financial has managed to maintain its dedication to shareholders by offering those enticing monthly payouts. For income-oriented investors seeking stability in their dividend income, Ellington Financial's resilience could hold substantial appeal. Number 18, SCHD. At the 18th spot, we have the Schwab US Dividend Equity ETF, a dynamic exchange-traded fund that deserves your attention. Let's talk numbers. Over the past decade, the SCHD ETF has delivered an impressive 11.67% compound annual return, showcasing its potential to generate significant gains over time. Of course, as with any investment, there's a level of risk, and the SCHD's 14.35% standard deviation over the same period speaks to that. But here's where it gets interesting. In 2022, investors reaped the rewards with a handsome 3.21% dividend yield from this ETF. Dividends are like a steady rain of income that can turn into a downpour of profits. If you're on the lookout for an ETF that aims to balance growth and income, the Schwab US Dividend Equity ETF could be a key player in your financial strategy. Number 17, PSEC. Claiming the 17th spot is Prospect Capital Corporation, a notable business development company with a strategic focus on making both debt and equity investments in the thriving middle market landscape. This approach to investing can provide a diverse range of opportunities, potentially adding depth and stability to your portfolio. What makes Prospect Capital stand out? Well, it's the impressive dividend yield of approximately 10.79%. This is a figure that can't be ignored, especially in today's market climate. A double-digit yield is often a sign of a company's commitment to sharing its profits with its investors, making it an enticing option for those seeking consistent income. Number 16, AGNC. Rolling in at number 16 is AGNC Investment Corp, a key player in the world of mortgage investments. AGNC's strategy revolves around residential mortgages, particularly agency mortgage-backed securities. What's noteworthy is their strategic emphasis on government-sponsored enterprise-backed securities, a move that can potentially reduce risk and enhance stability in your investment journey. Mortgage investments can offer a unique blend of income and potential for growth, and AGNC seems to have honed in on a smart approach. By focusing on securities that are backed by government-sponsored enterprises, AGNC is positioning itself to navigate the market with a degree of security that can be appealing to investors seeking a balanced equation of risk and reward. Number 15, Main. Securing the 15th spot is Main Street Capital Corporation, a savvy player in the investment game. Main's expertise lies in investing in a very specific niche: lower middle market companies boasting revenues ranging from $10 million to $150 million. But it's not just about the size. Maine has its sights set on companies with two key attributes: stable cash flow and robust competitive advantages. The strategy of targeting stable, smaller companies could offer a blend of growth potential and resilience, making it an intriguing option for investors looking for opportunities that might not be on the mainstream radar. By honing in on these distinctive traits, Main Street Capital Corporation aims to generate dividends and capital appreciation that can stand the test of time. Number 14, SCM. Landing in the 14th spot is Stellus Capital Investment Corporation, a contender that brings an interesting mix to the table. What's catching the eye here is the high dividend yield on offer. However, it's important to note that the stock has experienced a slight decline in value, reminding us of the ever present element of risk in investing. What sets SCM apart is its diverse portfolio. These aren't just investments in isolation, they are part of a dynamic range of firms managed by an asset manager. This can offer a level of expertise and oversight that might not be found with individual stock picks. Number 13, SLG. Taking the 13th position is SL Green Realty Corporation, a significant player in the Manhattan real estate scene. SLG holds the title of being Manhattan's largest office landlord, a feat that reflects its role in shaping the city's iconic skyline. However, it's important to address the elephant in the room. The stock has faced its share of challenges due to the ongoing remote work trends that have affected office space demand. As more businesses embrace flexible work arrangements, the demand for traditional office spaces has shifted. Nonetheless, SL Green Realty remains an intriguing stock to consider as the dynamics of urban real estate continue to evolve. The company's adaptability and strategic initiatives in response to changing market trends could hold potential for investors seeking a unique opportunity within the real estate sector. Number 12, PFLT. Stepping into the 12th spot is PennantPark Floating Rate Capital, a prominent business development company that navigates the world of debt and equity opportunities. PFLT's investment strategy is unique with a spotlight on businesses boasting defensible models. These models include diverse sectors like veterinary clinics and government contractors, reflecting a smart approach to risk management. By honing in on industries that have demonstrated resilience and a certain level of immunity to market fluctuations, PennantPark Floating Rate Capital aims to offer stability while maximizing potential gains. This blend of security and growth is a compelling proposition for investors seeking a balanced approach. Number 11, EPR. Taking the 11th spot is EPR Properties, a real estate investment trust that shines a spotlight on a unique corner of the market. EPR's focus is on owning commercial real estate that is leased to top-tier tenants, the kind that can be found in the Grade A category. This tenant quality adds a layer of stability to the equation. EPR's specific focus on properties like resorts and theaters further sets it apart. These are entertainment-driven spaces that, despite market shifts, tend to have a certain degree of staying power. The combination of stable tenants and a specialized portfolio speaks to a strategic approach in an evolving market landscape. From real estate investment trusts to business development companies, we've explored a diverse array of investment opportunities that offer both potential growth and steady income. Now, get ready to raise the stakes as we unveil the main characters of this story, the top 10 stocks that have caught our attention. These are the contenders that have not only weathered the storms of the market, but have also demonstrated their resilience and potential to deliver impressive dividends month after month. Number 10. O. Breaking into the top 10 is Realty Income Corp, a name that carries weight in the investment world as the monthly dividend company. With a reputation for consistent monthly dividends, Realty Income has established itself as a favored choice among income-focused investors. This steady stream of income can provide a cushion against market volatility, making Realty Income a compelling option for those seeking reliable returns. But what's behind the curtain? Realty Income owns commercial real estate that it leases to a diverse range of tenants spanning various industries. From retail to convenience stores and even theaters, their tenant portfolio is a mosaic of different sectors. This diversification strategy helps mitigate risks associated with industry specific fluctuations, providing a level of stability that investors appreciate. In essence, realty income is not just an investment, it's a vehicle that offers a slice of diverse, income generating real estate. It's this combination of reliability and diversity that has earned it the moniker the monthly dividend company. Number 9. Stag. Claiming the ninth spot is Stag Industrial Incorporated, a standout player in the world of real estate investment. Stag's strategic focus zeroes in on industrial, logistics, and warehouse real estate, a niche that's been gaining traction as the e-commerce and supply chain landscapes continue to evolve. Why is this noteworthy? These sectors have showcased resilience and growth potential driven by the ongoing rise of online shopping and increased demand for efficient distribution centers. By concentrating on the specific market segment, Stag is positioning itself to ride the wave of these trends. Furthermore, Stag's offerings extend beyond just income potential. Industrial real estate is often viewed as a hedge against inflation. The rising cost of goods and services can drive up rental rates and property values in this sector, potentially acting as a safeguard against the eroding effects of inflation. Number 8. ADC. At number 8, we have Agree Realty Corporation, a notable player in the real estate landscape with a unique focus. ADC specializes in owning net leased retail properties, which means their tenants cover the expenses associated with the property, including taxes, maintenance, and insurance. This structure can provide a level of stability and predictability for investors, making it an intriguing option for those seeking consistency. But it's not just any tenants. Agree Realty's tenant roster reads like a who's who of retail giants, featuring names like Walmart and Home Depot. These household names bring with them a certain degree of brand recognition and financial stability, adding an extra layer of reassurance for investors. Agree Realty's strategic approach to real estate investment, along with its emphasis on well established tenants, making it a strong contender in the realm of dividend stocks. Number 7. APLE. Making its mark at number 7 is Apple Hospitality REIT, a key player in the world of real estate investment trusts. Apple Hospitality REIT has a distinct focus on owning upscale hotel properties, all of which fall under prestigious and well-recognized brands like Marriott, Hilton, and Hyatt. Why is this interesting? Well, the hospitality industry is a dynamic space, and by aligning with established brands, APLE positions itself to tap into the global travel market. Recognizable brands not only attract guests, but also provide a level of credibility and consistency in service, which can translate to stable income streams for investors. It's worth noting that the hospitality sector can be sensitive to economic fluctuations and travel trends, as we've seen during recent times. However, with a diverse portfolio of premium hotels across different brands, Apple Hospitality REIT is poised to adapt and navigate through changing market conditions. Number 6. CRT. At our number 6 spot, we have Cross Timbers Royalty Trust, an interesting player in the energy sector. What sets Cross Timbers Royalty Trust apart is its strategic focus on energy reserves. This isn't your conventional investment in energy companies. CRT's primary goal is to pass along profits to its shareholders, offering a unique approach to income generation. The way it works is quite fascinating. As an owner of royalty interests in oil and gas properties, CRT receives a share of the profits generated from these reserves. This share is then distributed to shareholders in the form of monthly dividends. This setup allows investors to potentially benefit directly from the profits generated by energy production. However, it's important to note that the energy sector can be influenced by various factors, including commodity prices and market dynamics. These factors can impact the amount of dividends distributed by trusts like CRT. Thus, while this approach offers the potential for attractive yields, it's essential for investors to consider the broader energy landscape when assessing this investment. As we ascend the ladder of our countdown, it's time to introduce you to the stock giants. The top 5 best monthly paying dividend stocks that have captured our attention and are poised to make a significant impact on your investment strategy. These are the powerhouses that have demonstrated exceptional potential, reliability, and the ability to weather market fluctuations. Number 5. GLAD. Landing at an impressive number 5 is Gladstone Capital Corporation. a distinctive player that operates in a manner reminiscent of a venture capital fund. What's intriguing about Gladstone Capital is its strategy of investing in a variety of businesses similar to how venture capitalists fund promising startups. However, instead of funding startups, Glad invests in established companies across different sectors. How does it work? Gladstone Capital provides capital to these businesses in exchange for debt or equity ownership. As these businesses generate profits, a portion of those profits is passed along to shareholders in the form of dividends. This approach offers a unique blend of potential growth and consistent income, making it a compelling option for those looking to diversify their portfolio. Gladstone Capital's model of investing in established businesses might be seen as a more conservative take on the venture capital concept, as it targets companies that have a track record of generating revenue. While this approach can offer stability, it's important to recognize that businesses in various sectors can still face challenges. Number 4. HRZN. Breaking into the top 4 is Horizon Technology Finance Corporation, a forward thinking player in the world of investment. HRZN's unique strategy focuses on investing in high tech startups, positioning itself as a bridge to nurture and support innovation. This approach aligns with the dynamic landscape of technology driven growth, offering investors a glimpse into the future. Investing in startups can be seen as a high risk, high reward endeavor, and Horizon Technology Finance Corporation embraces this challenge. By targeting high tech ventures, HRZN provides a growth oriented option for investors seeking exposure to potentially explosive industries. The allure here lies in the potential for early stage companies to experience rapid expansion and generate significant returns. However, it's essential to acknowledge that the startup landscape is inherently volatile with the potential for failures as well as successes. HRZN's investment approach requires careful consideration of risk tolerance and a long term perspective. Horizon Technology Finance Corporation stands as a symbol of the changing investment landscape where technology and innovation are shaping industries and reshaping traditional financial paradigms. Number 3. LTC. Claiming the distinguished number 3 position is LTC Properties Incorporated, a prominent player in the world of real estate investment. LTC Properties has a laser focused approach centered on senior housing and skilled nursing facilities. This strategic choice taps into the ever evolving healthcare landscape where an aging population has sparked increased demand for these types of facilities. Why is this significant? The stability of the healthcare industry, coupled with the growing demand for senior care services, provides LTC with a strong foundation. The potential for stable, long term occupancy rates in senior housing and skilled nursing facilities can translate to consistent income streams for investors. Furthermore, LTC Properties offers a unique proposition in the real estate market, aligning with strong demographic trends that are expected to persist over the coming decades. As the baby boomer generation continues to age, the demand for these types of facilities is likely to remain robust. As we approach the pinnacle of our countdown, LTC Properties Incorporated emerges as a symbol of stability, reliability, and an astute investment choice in an ever changing market. Number 2. PBA. Taking the esteemed second spot is Pembina Pipeline Corporation, a significant player in the realm of oil and gas infrastructure. Pembina's focus on Western Canada's energy landscape sets the stage for a strategic investment opportunity. Operating in the oil and gas sector, Pembina plays a vital role in transporting and processing energy resources. What makes this company stand out is its positioning to benefit from rising oil and gas prices. As energy demand and price fluctuate, companies involved in the infrastructure side of the equation can experience increased business activity, potentially translating into higher revenues and profitability. While the energy sector can be subject to volatility due to geopolitical factors, supply dynamics, and environmental concerns, Pembina's strategic role in the energy value chain offers a unique level of exposure. Investors looking to capitalize on energy market movements while also seeking stability might find Pembina Pipeline Corporation an intriguing proposition. As we stand on the precipice of unveiling the champion among our stock giants, Pembina's strategic relevance and potential for growth showcase the diversity and dynamism within the world of finance. Stay tuned for the crowning of the number 1 best monthly paying dividend stock, the pinnacle of our countdown. Number 1. BRMK. Ladies and gentlemen, the moment has arrived. the unveiling of the number one best monthly paying dividend stock, the crown jewel among our stock giants, Broadmark Realty Capital Incorporated. Broadmark Realty Capital stands tall as a distinctive leader in the world of finance. What sets this company apart is its strategic focus on providing financial services to real estate investors and developers. In an industry where access to capital is paramount, Broadmark steps in to bridge the gap and enable real estate projects to come to life. How does Broadmark do it? The answer lies in its emphasis on short term loans backed by real estate assets. These loans provide a vital injection of funds to investors and developers, enabling them to acquire, develop, or renovate properties quickly and efficiently. The key to this strategy is the short term nature of these loans, which often come with higher interest rates, potentially resulting in attractive returns for Broadmark and its shareholders. The beauty of Broadmark's approach lies in its symbiotic relationship with the real estate market. As the real estate sector experiences ebbs and flows, Broadmark's services remain in demand, whether for purchasing properties, carrying out renovations, or funding developments. This strategic positioning can provide a level of stability and consistency that's appealing to investors seeking steady income. As we celebrate the number one position on our countdown, it's clear that Broadmark Realty Capital Incorporated embodies the essence of the stock giants. Companies that stand out not just for their potential for dividends, but for their strategic relevance and ability to shape the investment landscape. However, it's important to recognize that no investment is without risks. Real estate markets can be influenced by factors such as interest rates, economic conditions, and local market dynamics. It's crucial for investors to conduct their due diligence and understand the potential risks associated with investments like Broadmark Realty Capital. So there you have it. The top 20 best monthly paying dividend stocks, each with its unique story, strategy, and potential. From real estate investment trusts to energy corporations, from technology focused players to those pioneering financial services, these stock giants offer a tapestry of opportunities for investors seeking growth, income, and a stake in the world of finance. Thank you for joining us on this journey through the world of finance. If this video helped you on deciding which investments to make, don't forget to like, subscribe, and hit that notification button. Remember, every investment choice requires careful consideration and aligning with your personal financial goals. Keep exploring, learning, and making informed decisions to shape a prosperous future. Until next time, this is High Access signing off.